Welcome to the fifth episode of the Coordinate podcast. I am your host, Shobik Deb. Stablecoins are increasingly becoming the dominant means of monetary settlement for the internet, and payments have become one of the most prominent utilities of blockchain technology. But most chains still treat stablecoins like just another asset and payments as just one of many use cases. Tempo is taking the opposite approach. It is building a blockchain optimized for payments, instant, deterministic settlement, predictably low fees, and a stablecoin native experience end to end. To unpack Tempo's architecture and product experience, today I am joined by Mallesh Pai, who is a researcher at Tempo and also the Lay Family Professor of Economics at Rice University. Mallesh, welcome to the show.
Thank you. Lovely to be on.
My goal today is threefold. First, to understand what was broken or missing in existing blockchains that motivated a payments first chain. Second, what are the specific technological and product choices that have been made to make payments and stablecoins first-class citizens at the protocol layer? And third, zooming out, what does adoption actually looks like for Tempo? Mallesh, first question, how did you get pulled into Tempo? You were a professor at Rice University. What is the story here?
It's an interesting story. I started out my undergrad was in computer science, and then I discovered I loved game theory. So I did a PhD in game theory. But as I did my PhD in game theory, there was this growing field at the intersection of computer science and economics, and I spent a lot of my time working in that. So ad auctions, digital privacy, digital fairness, all of these questions were core to my research. And then, this continued, and at some point during the pandemic, it was just I wanted something new to teach, so I said, "Oh, everyone's talking about this DeFi thing, so let me learn what this DeFi thing is." And that's when I was like, "Okay, I don't know if blockchains work, but if they're going to work, everyone's focused on the cryptography and the distributed systems, but we're building socioeconomic systems. We need to also get the economics of it right." So that got me into it. I spent a little while sort of just tweeting about it. I met Sriram actually along that path as like, okay, here's what you can achieve if you're a professor and you go into crypto. And then I joined Consensus. I had a lovely time there for a couple of years, and then joined Tempo.
During this whole experience, you mentioned that you were focused on socio-economic aspects of that, and you probably started noticing some shortcomings in the existing blockchains that made you rethink maybe the existing blockchains are broken for certain aspects like payments, stable coins that motivated you to go to
Tempo. I think what happened was, the election happened and suddenly that changed the regulatory environment. So previously I was interested in these questions of MEV, order flow, that sort of stuff. And these are fun questions. They're important questions I think we'll need to solve eventually. But also I think just what happened in 2025, early 2025, was I saw like suddenly all these companies, the companies we always wanted to work with, or BlackRock, Apollo, Fidelity, Franklin Templeton, Swift, DTCC. These are like all companies that suddenly were making headlines, doing stuff in the space, wanted to get into crypto. I just saw this opportunity, like with Tempo, that we could get a lot of these large institutions involved in crypto in a way that hopefully would be sustainable and work for the long run.
Tempo is presenting itself as the where payments and the stable coins are the first class citizen, and almost no other chains do it. Is there some difficulties for most chains to do this, making payments as a first class citizen, stable coins as the first class citizen?
We believe it is possible to build a blockchain where payments can live as a first class experience. I think part of the story so far is that even though the initial sort of like Satoshi original white paper said peer-to-peer payments, like it's for payments, we never really nailed this payments use case. Like the number of people who are using this, the fraction of real world economic flows. I mean, just going back, like at some point I got paid at some point in like USDC many years ago, and my wife was like, "What is this? Can I use it? Can I spend it?" And I'm like, "No." She's like, "Then what do you mean you got paid?" Right? So I think that's sort of what we want to fix at Tempo. It's just whether or not, like, however easy it is, there are parts of it that I think are just obvious oversights. There are parts that are actually deeply difficult. And there are parts that are not about the tech, but also connecting the entire ecosystem in the right way that is accessible to partners that want to use it. So all of those three things have to come together. We want to make a good shot effort in doing those.
I see in in Tempo's announcements, a lot of partners that are coming up. Is there like is there a way for categorization of these partners, like top 5 use cases that you guys think a payment first blockchain will serve the needs for?
I think what's really interesting about payments is from the perspective of retail, from the perspective of you and me, like when we just, we have Venmo, we have Zelle, we have our checkbooks, we have our credit cards. And the way we think about it is, well, why is this hard? Like, I want money, I want to send money, somebody else wants to receive money. We do something, swipe, click a button on a phone, and money is moved, right? And while that seems simple, the underlying reality is that, we've built a lot of infrastructure in traditional finance around hiding, eliding, sort of obfuscating that complexity that actually goes forth, that goes between that. So often consumers have a good enough experience, especially in many countries, even in the developed world, but also in the developing world. Like India has, as you and I know, UPI, and it performs beautifully for retail. When it comes to companies, they can't avoid the complexities. If you're a multinational company, you have to balance like bank cutoffs. Even if you're a domestic company, you now have to you're a company, let's say, an Uber that wants to pay your workers. Do you pay them every week? Do you when you want to pay the people who are driving for Uber? Do you pay them every week? Do you pay them by the minute? If you pay them by the minute, how do you get the money to them? What fees do you pay? How do you reconcile that with your backend? All of these questions are easy for any single payment, but when you want to do these things at scale, we've layered systems on top of systems. Our banks still run on COBOL. I had one of my friends' moms, she moved here. They moved here in the 80s. She started like in the 90s when the kids were a little bigger. She learned COBOL. And she was working at a bank. The bank, she was now ready to retire last year, and the bank was just throwing her massive amounts of money, saying, "Please don't retire. There is nobody other than you on this, left who can manage this. So maybe AI will take it over." But there's a lot under the hood that we want to fix, basically.
So it seems like there is an existing infrastructure has a lot of ancient infrastructure. Its ancient pieces are just all patched around to
patchwork, right? So there's ancient infrastructure. There are ideas that were perfectly fine for 20, 30, 40 years ago, but don't work in the modern internet age. The idea of banking hours, for example. Now, if you're doing cross-border, then banking hours don't line up. So somebody in Singapore who wants to send a payment has to make sure that they have somebody at their desk at 4 a.m. Singapore time so they can catch the last cutoff at the New York time. I'm probably messing up the numbers slightly, but that's sort of the degree of complexity that you need to start thinking about. And then you build these fintechs on top of it, many of which exist to make not to fix the underlying complexity, but to make it vanish for the end user. So I provide some kind of service that makes it look like my bank is working, even though or fronting me the cash or the liquidity, even though my bank is not moving stuff. So those are all questions. They come up. There's a lot of pain in cross-border movement. If you spend any time trying to send a wire internationally, you realize all the joys of correspondent banking. Correspondent banking was invented in the 1400s by the Medici family. That system has somehow stuck with us. There are hundreds of billions of dollars of locked liquidity in Vostro and Nostro accounts to make correspondent banking possible. The idea being within the US, everyone has all the banks have a bank account at the Fed Reserve. So when I want to send money to your bank, when I want to send money to you, my bank can just settle with your bank at the Fed Reserve level. There's no common global bank. So we have these networks. These networks, again, the routing is really interesting. As a computer scientist, you'll appreciate this. They don't optimistically route forward. The first leg of the sender has to specify the entire route a priori. It's not like DNS. And then if any step fails, it goes all the way to the back rather than trying to reroute.
That's very inefficient.
Exactly, right? And then every bank obviously needs to do its own KYC, but or KYB or whatever money laundering checks, but they don't like optimistically do all of them. I send money to bank A then does its check, sends it forward to bank B then does its check, and otherwise every sequence of, so we could do KYC all the way forward and then do banking, like just have one money move through zip in one thing. But instead, the money moves, money gets stuck somewhere in the middle because because some check failed. Originally, like if you'd caught me in 2024, I'd have said, payments are simple, we should be working on MEV. But then you start seeing this sort of, you look under the rug and you realize there's just an endless amount of stuff we could work on here. And this is something that every human deals with, right? Like at the heart of the global economy is the idea that maybe some people want to trade, maybe some people want to do stuff. Everybody needs to make a payment. Everybody needs to make payments. The
payment is like a fundamental primitive.
It's a fundamental primitive of the modern economy, of the economy as we've understood it since 2,000, 3,000 years ago.
This was a fantastic summary of what is broken with the current infrastructure. So how is Tempo solving this thing?
So I think there's a few high-level things. So one is we're making opinionated choices at the protocol level on what does it mean for a general-purpose blockchain to still be payments first. And we can dig into those, but those are with sort of trying to make payments, stable coins, fiat currency, first-class citizens, rather than something that's retconned onto the crypto rails, right? The second thing is just we have just this. I'm very lucky to be a part of this amazing team that can build a bunch of stuff, and also just has amazing connections with the broader industry. So we can bring along, hopefully, our partners, we can bring along our infrastructure ecosystem so that from the perspective of an enterprise trying to use our system, they're not thinking of it as Tempo is one vendor and then I have to get, a blockchain. Yes, you will have multiple pieces of infrastructure dependency, but we're trying to help enterprises sort of construct the solution end to end, and not just saying, okay, we do the blockchain part, you go figure out who to get your indexing from, who to get your whatever from. We're trying to help with that. And the third part is just distribution, right? All of these things have network effects, and we are lucky to have some brilliant and large design partners, and we're hoping that these will, they will both try stuff on the network, get it kickstarted, and this will be a lever for us to bring more and more use cases on board and users.
Going a little bit deeper on this architectures, what are the primary modules that you guys have constructed that is enabling this whole thing? You said that when you work with your partners, you just don't build a blockchain and tell the partners, hey, figure it out for you. You build the whole infrastructure around it. What are all these modules and pieces that are there?
I think, in terms of the partners, what we've been trying to do, help our design partners with, is help them construct an end-to-end solution. So help them think through their vendor choices, help them think through the trade-offs involved, if any, help them, and then we have these amazing, we have obviously these amazing engineers who are working on the back end on the core infra, but we also have these amazing sort of product engineers who are essentially forward deployed engineers helping construct these solutions. So that's been a big part of what we're doing with our design partners to make sure they're actually shipping stuff, not just a logo on our website.
One of the major parts that I saw in your documents is this something called TIP20. TIP20. What exactly is it? Is it just a replica of ERC20, or has much more richer set of features and a much more expanded version is there? And how did you guys have modified it for the payment first applications?
That's a great question. So we did the ERC20, TIP20 is obviously paying an homage to ERC20, and it's our opinionated take on it. So it's backward compatible, but it adds other features that just didn't, if you look at all the ERC20 implementations out there, especially the ones from from the major stables, they have added stuff to the basic ERC20 format. We've taken some of those ideas and we've added some more, with the idea that you, as in a world where maybe a lot more than a few people will be issuing their own stablecoins, we shouldn't leave the questions of how to construct your stablecoin to you. We should give you a full gamut of functionality that you can build in. So some examples of that are, we have some of them are deeper ideas, like we have role-based access control built into the TIP20 so that you can separate who is the administrator for the TIP20 versus who are the authorities that are enabled to mint or burn this, versus who are the people who are the compliance people, who are the addresses that can blacklist or whitelist, that can control these things. We're also thinking about this idea that maybe the same issuer, and this happens a lot, right? Like the same issuer has a technology. They issue a US dollar stable, they issue a a Euro stable, a Swiss franc stable, and so on. Like maybe they want to share certain policies across these things. So maybe they just they're subject to the same regulators, so they want the same blacklist or whitelist. And so we have a tip, what we call tip 403 is, and this is an homage to HTTP 403, the error code. So this basically is a way for multiple coins to share, multiple tokens to share a common authorized list, like of either a whitelist if you're trying to make it a closed loop stable or something like that, or a blacklist. There's also maybe smaller things that are not big technical accomplishments, but still I think are important to quality of life in ways that weren't thought of with the ERC20. So I'll give you two examples. One is just the idea of having a piece of the declaration that is the currency code, right? So I, as a TIP20, can say this is a USD, this is meant to be a USD stablecoin. I can just, there's a piece, I don't have to put it in the token name saying MUSD so that people know it's a USD stablecoin. I can also just declare this is a USD stablecoin. This doesn't mean anything per se. It just makes it easier for people to find what is the currency that this token is meant to be.
Is this like a memo, a small memo piece besides?
It's like it's just a currency code. So okay. It's and you can use it for other stuff. So it doesn't have to be a fiat currency. You could leave it blank if you're doing a true true crypto token. You could leave it. You could put in if you have a wrapped Bitcoin or something, you could make it XBT, I guess. But it's useful. It unlocks some functionalities that you can then compose with it. Like you could. Obviously, you don't want to call everything that just says USD stable a USD stable coin, but you could make it a prerequisite to calling it a stable coin. So necessary but not sufficient condition, if you will. The other thing, and this was the most shocking unlock of our time, the transfer with memo function. So trivial extension to the transfer function, which is add one more argument, bytes 32, that lets you send some arbitrary thing, arbitrary little info. And this is just, I cannot tell you how many times we showed up at a partner meeting wanting to tell them about all the cool stuff we'd spent months working on. And they were like, you can do transfer with memos, right? Because this is a real pain point, right? I said multiple.
Can you go over what is so special about this feature? Why people want it?
So here is the primary use case, right? A transaction in many cases does not start and end on a crypto ecosystem. It might start in the fiat world, get minted into stables, and then go to somebody else and then get sent out again, for example. It's really nice to be able to, along with a crypto along with a on the crypto rail, along with the transfer, have a little memo. So this memo could, for example, and this already exists in TradFi systems. So Swift, for example, has this notion of the UETR, the universal or the unique something transaction reference. And this just means if I send money to you, like I'm here, you're in India, let's say, and I send you money, I want one piece of data, like one string that's attached to it, that because there are like maybe 7 or 8 transfers through these correspondent banks, I want one thing that links all those transfers across each other, so I can link multiple transactions. For even for pure crypto transactions, I now have something that is separate from the transaction hash and so on, that just tells me like that I can link to my database saying this transfer corresponded to this payment. Maybe a single transaction has 10 transfers in it. I just run payroll, right? I do some smart contract. I might want a separate memo, like the transaction hash might have 10 transfers. I want to be able to identify with each transaction, what does that correspond to in my internal database? And people were doing all sorts of hacks, like, oh, if it's on an EVM chain, it's transaction index plus transaction hash plus log index of where that transfer fell in the transfer logs. And they were just like, okay, no, I can take the thing that I'm already using in my internal database to represent it. I can tie those two things together, and now I have easy ease of developer use. I mean, it's a DevX unlock. I mean, and developers are our users, right? Like for a blockchain, your users are more like, in many cases, your developers. You're making their lives easy to actually focus on doing the things that they want to achieve rather than basic stuff.
There is one thing you mentioned, policies, which is pretty fascinating. So can anyone write any policy, or is it there is a bunch of default policy?
Anyone can write any policy. Every coin gets to pick which policy they follow. Okay, so other people, I can show up and say, these are, I have the special policy that only blacklists Shobik for some reason, and no one will follow that policy, but that policy can exist on the blockchain. The idea is maybe some parties as a public good just go ahead and put out, this is the OFAC sanction list, and now every person can adopt you could have that as a service. But yeah, that's kind of the answer.
If I want to search some custom policies or something, is there one registry contract somewhere where I can?
There is exactly. There's a registry contract. It's a registry contract, so you can look at all. You can query them and figure out which policies there are out there. We're thinking of this more like not as a business model for anyone. It's like, because these policies are public, right? Everyone can use them and look at them. We're thinking of it more as like a quality of life, where somebody managing 10 different, or imagine a lot of people, Bridge, Coinbase, Circle, are all announcing things of the nature of issuance as a service. And maybe but they share, even if I issue 20 stable coins, I'm subject to the same regulator. So maybe I just put one common policy and I only have to update it once, and every coin I issue, I can put into that, make sure it satisfies certain policies.
One feature that I found really fascinating in TIP20 is this pro rata rewards. Many protocols, they want to distribute rewards, and they all end up writing that custom reward contract. And in Tempo, it seems like this is the functionality is already inbuilt into it. Can I, as a protocol, just come and use it? Is it that seamless?
There might be some controls. So you might, if I have token A, I might have only one authorized party or some authorized parties who are allowed to distribute rewards beyond that. I don't want token B sort of coming in and just distributing to my users using that potentially. I think so that kind of permissioning facility is built in. But beyond that, currently it's just meant to be a very simple feature, which is a way for a token to distribute rewards pro rata to the current sort of snapshot of ownership. The idea that we'd like to build towards, and the question, because of the issues of doing these computations on chain, the idea that we really want to build towards is like we want to distribute not based on like a snapshot of the holdings, but distribute based on something like a like time averaged holdings. So if you've been holding the token for a while, you get maybe more rewards in cases where think of like a real world asset trying to distribute dividends based on who's held, like based on how you've held the asset rather than based on just the snapshot date. But that's not live. That is something we're building.
This was the part where I talked about tip 20. Now going one level up is the transactions. So Tempo has something special called TempoTransactions. Is it similar to Ethereum's transactions, or have you guys modified it, added some more features that make it much more efficient in the payment use cases?
So I think it's meant to be our so we had Ethereum transactions, right? And we had EOAs, and we realized that there were a bunch of additional features that we wanted to add into those transactions, but didn't know how to add them. So we did 4337 for a bit, and then 4337 had, let's say, developer experience issues. And you needed to have a new address for that, so people didn't migrate. So then we did 7705, but 7705 had its own set of issues. And the main thing TempoTransactions tries to do is instead of telling every user, hey, you go figure out, or as a wallet, you go figure out exactly what set of things you want to you want in your custom 7705 contract, and then users have to think about, am I delegating to the right contract, so on. We're just going to take a bunch of use cases that we think are the most important ones and put them into a transaction format. It's so some of the things that are enabled. So one of them is access keys. So I can delegate a scoped access key to a I can delegate a scoped access key to some other and then that access key can sign for my account natively in the Tempo transaction. I can allow other forms of signing other than the Ethereum ECDSA. I can set a fee payer. So a fee payer can sign a transaction along with me, and then natively within on the blockchain, the fee for the transaction will be deducted from the fee payer's account, not from my account. So I can do gas sponsorship sort of natively rather than some of the things like the bundles and so on that we've tried to build into existing if you look at some of the early implementations of gas sponsorship on some EVM chains a year ago. You can build natively schedulable transactions, like you can say that a transaction is not valid before a certain timestamp, or you can put in an expiring transaction so that a transaction is not valid after a timestamp. So all of these features, like we've just taken a stance that these are the top 99, these use cases cover 99% of the things people want to do with account abstraction, and we've just baked that into the transaction format.
You use the word natively in a bunch of features. What does natively mean? Is it embedded within the execution machine of
it's embedded in the execution machine. The user does not need to allow does not have to delegate to a 7705 or anything to unlock any of these features. As long as they can sign one of these transactions, they can send one of these transactions.
Mentioned that besides ECDSA, you can use some other authentication mechanism. What are these other authentication mechanism? Can I use my iPhone where I have the my
Passkeys? Yes, that is
Passkeys,
the Passkeys are the most are the things that we are most excited about. We think like that's a very natural form factor. They're super secure, or at least secure for retail in ways that are, we can argue about the exact security, but let's be clear, like seed phrases and so on have their own backlashes for retail. So these are sensible things that you can do. You can scope an access key. So you can say, okay, this access key only works on uniswap.org. And now it can't be used anywhere else. And if you go to the Tempo docs, all our demos on the Tempo docs heavily use the Tempo transactions and the passkey features. So you can directly sort of log into the Tempo docs with whatever you have, Touch ID on your machine or your phone, and you can just see sort of all these features build out.
In transactions, there is this part of the fees. In Ethereum, they or in any or Solana or major blockchains, they mention that you have to pay in a certain currency. Certain. Does Tempo also take such a opinionated approach? Oh, you have to pay in certain fee currency, or it won't be accepted by the protocol, or
Right.
like I can, as a user, I can pay it in any token, the fees.
Right. So interesting side note is, like, obviously it's like every blockchain started out, or all the major blockchains before this started with this idea that there was a native token to that, and that is what you paid fees in. And we basically came in and said fees in any stablecoin. So currently at launch, it'll be fees in any USD denominated stablecoin. So that's where we use the currency code. But now the next question you might ask, well, what's stopping me from declaring my coin as a stable coin and saying, okay, you should accept fees in that. So what we have underneath the hood is a really simple, very fast AMM. And what does this AMM do? It basically says every validator can specify, this is the currency I want, this is the stablecoin I want to receive my fees in. Okay, so validator A can say, I want to receive my fees in USDT. And validator B can say, I want to receive my fees in USDC. Okay, you, on the other hand, might have some other stablecoin. The fee AMM is a simple constant price fee AMM. Because fees are low, you don't need that much. All it does is it takes in a currency that it's willing to accept liquidity in, and it pays the validator out in the token that the validator wants. So as long as there is somebody who is willing to essentially, or as long as the fee AMM has liquidity that is willing to take, there's no price discovery on this AMM because it's a constant fee. As long as somebody is willing to buy your dollar for a dollar, well, it is a dollar in our view. We don't sit and prescribe what things can be accepted as fees. The validators choose what they want. The customers choose what they want to pay in. And the fee AMM just makes that transaction by transaction swap at the protocol level.
In this case, does the customer needs to know that there is an AMM under the hood, or they don't even need to know? It's just abstracted out.
It's just purely abstracted. From your perspective, you might be a person, you use Bank A. Bank A puts all your currency in their proprietary stablecoin, and you use Neobank A. Neobank A, of course, you might not even see the fees, but B, even if you are, and you only hold Bank A's proprietary stablecoin, Bank A just has to make sure that there is some liquidity on the stablecoin, on this fee AMM that makes that does the conversion, and it's pretty performant. Like we made it simple. It doesn't do price discovery. It's not doing any fancy calculations. It's just in the business of very quickly transmuting the currencies users want to pay into what validators want to receive.
Got it. Okay, so this was the Tempo transactions. Now, one level up, the Tempo blocks.
I should say one thing, by the way, which is that obviously regular EVM transactions are still fine. Tempo transactions are just an extension. A new EIP that just launched, EIP 8141, is very much in the spirit of Tempo transactions. It's a similar sort of idea, which is bake. So it has more generality, but it's something that's been considered. The second thing is this fee payer idea you can use without using Tempo transactions. So even if you're sending a regular bog standard EVM transaction, it will use the fee AMM under the hood. Anyone can use it.
Oh, two questions. First one, so you can send a regular EVM transaction instead of Tempo transaction in this system. So it's a backward compatible.
It's everything. We have tried to design everything with as much backward compatibility as possible. So other than the one thing that we have not done is we do not have a native token. And so you cannot pay fees in the native token. And part of it is, by the way, like the interesting thing about native tokens is some really harsh regulatory guidance and accounting guidance means that businesses have to hold any native cryptocurrency token. They have to mark them down to zero. So even if I have like $10,000 of ETH, I have to hold, like I have to value that at zero. It has zero value. And so what that means is if I need to use ETH, suppose forget the institutional part of like I want to hold ETH as a store of value or anything like that. I just want some ETH to do my stablecoin transactions. This is super capital inefficient for me from an accounting perspective because some of the accounting guidance out there requires me to mark it to zero. Some companies aren't allowed to hold any ETH at all. So then they say, okay, now I need one more party who is going to be the party that I pay in dollars and pays the ETH for me just in time. Now I have to price in a certain amount of currency risk because I don't know how much everything's going to charge. We're just simple. We flat fees, US dollar denominated, FX denominated fees like in other currencies coming soon.
My second question was this EIP 8141. That you meant. What is it exactly?
Basically, it's like trying to extend the notion of what is a transaction to enable like a transaction to specify additional signers, additional parameters, things like that. So it is a similar thing that's trying to bake 7705 type ideas, but into the protocol. But it was just proposed like 2 weeks ago, I believe. So it's brand new.
Switching gear to the blocks. Is the blocks in Tempo same as the blocks in Ethereum or any other chain, or there has been changes in the block so that enables the prioritization of payment here?
Right.
Because
it's
a protocol. Protocol is prioritizing payments, the whole protocol. So is this where it's happening?
This is another place. Like I mean, like we're trying to do prioritization of payments at every layer of the stack. So FEMM, pay in stables. Like it's very nice that when I'm paying you in USDC, I can just pay the fees in USDC. If I turn around and I have to settle with somebody else in USDT, I can pay the fees in USDT. That's sort of a feature that we liked. At the block level, we're doing two things. So one is we're doing something we call payment lanes. So what is payment lanes? We identify certain things as payment transactions, and we say that like if let's say you have 100 mega gas block, maximum gas that the block could use, a certain fraction of that gas is reserved for payments. So you cannot. The way to think about it is general transactions, swaps, whatever. This is a permissionless blockchain, but they can use up to, let's say, I'm just picking numbers. I don't remember the latest ones for our testnet, but like if there was 100 megagas block, maybe 50 megagas is available to anybody who wants to use it. There's an additional 50 as long as you're doing a payment transaction. And what's a payment transaction? A payment transaction is a transaction that only touches a tip 20, only touches these tokens, and only like it can't call to a different contract basically. And we'll talk about we'll work with our partners to make sure that things that they need for legitimate, or like we'll work with just the broader user base to make sure that things that you need for a legitimate payment transaction can get into this payment lane. And that way, even if like life is going crazy, October 10th or yesterday is happening, there's a bunch of congestion in the regular lane, payrolls can still run on time, people can still send out, settle their bills. All of that doesn't get delayed, doesn't get dropped just because something is happening in the world outside.
Basically, this is removing the externality to the payments.
Exactly.
Payments.
And part of the story is, like the way we think about it or the way I think about it as an economist especially, is like payments are incredibly price sensitive. So if you start telling me that my payment could cost, 1,000th of a cent, but once a month or once every 6 months, whatever, pick your number, it might cost $15, otherwise you have to wait a day. That's kind of really bad workflow for somebody who just relies on, it's like, it's like for payments are like the electricity of the economy, right? They have to keep flowing. Otherwise, the whole thing comes to a halt, and you say, "Oh, you either pay this crazy amount or it's going to stop." That's not great UX for customers.
You mentioned that for inclusion in the payment lane, it has to
Yeah.
be a payment transaction.
Yeah.
When validators are proposing the block, how do they identify something is a payment transaction? What is the identifier there?
Right. So right now the identifier is just that tip 20 contracts are easily identifiable. They're basically, the address starts with 0x20 0000 with like, I think 20 or 12, or I forget, some large number of zeros. So only tip 20 contracts can live in a certain address space. And one way we identify payment transactions is by just saying, okay, if it's tx.2 of the transaction is a tip 20 address, which is like statically verifiable and very quickly verifiable, then it's a payment transaction, otherwise it's not. So validity is very easy to determine. We don't want something where the validity of whether the transaction is like, we need it to be statically verifiable. It can't depend on state, or it can't depend on it can't depend on too much complex logic, because that'll slow down our ability to build and verify blocks.
In the Tempo blocks, there is this fascinating concept called sub blocks.
Yeah.
Is it a protection for censorship resistance? It seems similar to the concept of inclusion list in
Right.
Ethereum, or maybe some version of the multi-proposer thing in Solana. So
Right.
how to model it? Like
right. So I mean, like multiple concurrent proposers was what got me into this, right? That was my first paper in blockchains with the wonderful Max Resnick and Elijah Fox, and we've each gone about sort of getting it. I think of subblocks as like a training wheels for multiple concurrent proposers, but right now we're not as worried for the way we want to run it is, right now our main focus is the following. I am one of these validators, okay? And in our case, our validators are these enterprises, or some of our validators are going to be these enterprises that have their own large native flows, okay? So I'm Stripe, I'm Visa, I'm somebody else. Like I have a certain amount of flow that is just transactions, payment transactions, other transactions corresponding to my users, right? What can I do with those transactions? One thing I can do is I can just send those transactions into the regular public mempool, or submit them to whoever is doing it. And that has two problems. One is, of course, if something crazy is happening, like yesterday, there's a bunch of trading activity, the world is falling apart or whatever, my transactions might get delayed. Okay, all of the other stuff that could happen to my transactions. So ideally, as Stripe, I'm doing all this work. I have a validator. Ideally, what I'd like to do is I'd like to control the announcement of that transaction. I could put it in my block, but then I might be I might be a proposer every 10 blocks. I might be a proposer every 50 blocks. Like, do I really want to make my users wait 30 seconds just because I want control? So subblocks was a way around that, where I can propose a small part of the block. And again, this is done by something like a lane. The gas corresponding to a subblock can't be used by the main proposer. So the main proposer has no incentive to block you. To the contrary, the main proposer actually unlocks a little bit of extra gas if they include your block. So they have a slight incentive. We're not super worried about incentives at this early stage, even though, like, as a game theorist, it's what should keep me up at night. But right now we're thinking of it as like, just from the perspective of a validator, they have once every X blocks, they have the right to propose a gigantic block. That's their main job. But they also have a fairly reliable way to propose a small block every block. And they determine what goes into that. So they can take their users, their whatever their partners, and they can put it into that. They can shove it into these smaller blocks.
And the positive incentive here is that if I include these sub blocks, I unlock little bit more extra gas that I can add into the. So that's the positive incentive.
And there's no, like, we're not trying to do anything at, like, when that's why I said it's training wheels. We can consecutively, as we decentralize the network, we will add more and more safeguards to make sure these are actually being included, with the option potentially to go to full multiple concurrent proposers based on our learnings from this path. But I think just jumping from, today we have one monopoly that proposes every block, to, we're going to full yeet it into MCP, that sounded sort of dangerous to me and us. So we just, this solves a real user need right now, and we'll build up towards the full thing.
Got it. So these blocks, they have finalization window. They have to finalize as soon as possible, because you have to give the best payment experience, right? Payment is about speed. And so how are you guys thinking about the finality here? And is there a special consensus protocol you are using for getting the fastest finality? What is the thinking?
So we have you already had the GOAT, Pat O'Grady, on your podcast. So we are working with the Pat and team with Commonware on the consensus. So we're using Commonware's implementation of Simplex, threshold Simplex, and the properties of that is the properties that we inherit. So all the joy, like, we have a bunch of cool stuff that we can do and will do with the threshold part that we're not doing yet. And in terms of finality, it's, I think 1.5 blocks worth of round trip time, a little more. It's not exactly tied to the blocks, right? Like their Simplex consensus protocol. So it's like the block gets announced, and I think one more round trip is what you need. So we have about 5. Our ideal block times are something like 600 milliseconds, and then finality in like 700 milliseconds. So roughly that's where we're going to start.
Got it.
So sub-second block time, sub-second finality, basically, is the punchline.
And can anyone participate in the consensus? If I just open up a full node and I can just participate?
So we're starting with the proof of authority based system. And part of the reason is we want the network to mature before we open it up. And part of the reason is, like I said, we don't even have a native token. So one of the things that, of course, if you want to do permissionless consensus, one of the things you need something to deal with civil resistance. And we're not going to do a proof of work chain, and we don't have a token. So we will get there. We'll figure out how we want to decentralize, and we'll have an active work stream on that. But right now, our focus is just small validator set will become large validator set. We'll add more. We'll add more validators. Go from and geographic diversity, enterprise diversity. Bring in crypto natives, and then eventually fully decentralize.
Okay. So now on the next on the peripheral toolings, wallets, block explorer. So first wallets.
Yeah.
How are you guys thinking about the wallets? Is it like I can just take MetaMask and put into it, or is it like you guys are building your own custom wallets that will have much, like, it's a different model itself?
No. So it's going to be a bit of, like, all the major wallets have been super friendly, and MetaMask, Phantom, they will like embedded. We also, like, a lot of our use cases will be embedded wallets. So people like Privy and Turnkey, they're all going to work sooner. The delivery timelines and so on, but they're all integrating with us, I believe. We also have our own, like, you can see on our whatchamacallit, like, we can do this embedded wallet experience very nicely that you can see within our docs. And that's because we inherit a lot of the tech that my colleagues who formerly worked at Porto at Ithaca brought. So we'll do some cool science experiments with that.
On the Block Explorer, I see Georgios posted something about Block Explorer once, and it's super fast and it looks slick. How are you
Yeah.
guys thinking about the Block Explorer experience?
We think of block explorers like we basically looked around. We weren't how do I want to say this? Like we wanted our explorer to have a bunch of functionality and needed to be extensible. Like there are things that we want to be able to decode into a block explorer. Like we have a blockchain with no native token, right? We want to be able to show like what fees were paid, who paid the fees and what, like all of that native stuff. So we just wrote a block explorer from scratch. And it was a fun learning experience, both in terms of like producing this piece of technology. I believe other explorers will also be available at their own time. But right now we have a native block explorer because we think there's just, the ability to see what's going on the blockchain. Like we should at least provide one native experience on that.
Next is on the developer experience. Suppose I am a company who wants to do remittances and using Tempo. What will be the whole process? What does the whole process look like for integrating with the Tempo?
Yeah.
Does Tempo team have some kind of enterprise style developer experience integration, or is it much more self-learning?
Self-serve, yeah.
Self-serve.
I think it really, like, we've been working super closely with a lot of the larger, like, and it also comes down to how crypto native are you to begin with, right? Like if you're a crypto native company who wants to integrate an additional chain, maybe you don't need that much additional help. Like you can just point your best engineers or your Claude at the docs and it'll one-shot it. And that's sort of been one model. We've also been doing super bespoke white glove work with a bunch of design partners that vary across geographies, across use cases, and there the idea is both for us to help these companies come on chain and help them end to end, but also for us to then take that and say, okay, where are the gaps that either we need to fill in or we need to tell our infrastructure partners, hey, these are things that you should be filling in, and then be able to provide more cookie cutter experiences to a larger set of companies, because there's only so much you can scale like a super white glove experience to. So that's sort of the high level of it. The low level of it is we have a lot of this, all the infrastructure partners and love, in terms of embedded wallets, in terms of like high-end signing stuff like Fireblocks, in terms of RPCs and nodes, Alchemy, QuickNode, all of these guys. Wallets, we have all of these excellent partners.
On the next set of features, I saw that Matt Hong, he tweeted about privacy is a important feature that you guys are working on, which for companies also, like when they're doing the payrolls and all this thing, they don't want to be public. So how are you guys thinking about privacy? Is it ZK level, ZK privacy, or is it some kind of mixed net type obfuscation? What is the current mental model?
I think the current, so firstly, of course, this is a permissionless blockchain. So like in terms of deployment, it'll be like the testnet is completely permissionless. We're super open to privacy providers coming and offering stuff. We want to offer a controlled privacy experience. And there are sort of three things that our partners have told us. One is that it needs, like, for a lot of use cases, like, they want compliance, right? So even if it's private, they still want to know that they're not transacting with a sanctioned party, that they can get they want the rest of the world to not see what they're doing, but they want to be able to see what they're doing in ways that are reasonable, if that makes sense. So that
means that it should be able to check with the policy engine that you guys have 403.
Yeah, something like that. The second thing is interoperability. So what is, like, a lot of privacy solutions out there in the market have like, oh, you need to install a separate extra thing to your wallet, right? Or you need to install a whole separate extra wallet. Like a different wallet is needed to interact with some of the OG privacy solutions. And they have like, I mean, I understand why they need to do it, but they have like very complicated UX. Like some of these nullifier-based solutions, you have to download you have to hold on to your notes. If you lose them, you're in trouble, which means you have to back them up. But then if you back them up and the backup gets hacked, then you've lost your money. So that kind of user experience is not going to work. Like what you really want, no, what you really want is a bank type interface, right? The bank sees what you do, you see what you do, you see what you've done with other people, but you can't see other people's balances. You can't go, I can't go directly and see what Shobik has done, but I can at least see what transactions I've done with Shobik. And the bank, on the other hand, they're willing to trust a party to say, okay, you hold on to all of this for me. I don't ever say, oh, I need, well, people do say that, and there are other solutions for that. But for the use cases we want to solve, like, we're willing to trust certain parties with certain amounts of data. So that's sort of the shape of what we want. Like, it has to be technically easy in terms of integration for the user, and it needs to have all these properties. And that's sort of what we're building towards. We're hoping to have, like, along with in the next few months, let's say, we are hoping to have something substantive in terms of a full privacy solution to announce.
Next one is, are you guys doing something on agentic commerce?
Oh yeah.
What is it?
Agentic commerce is fun, right? So there's two sides, like there's two ways to think about agentic commerce. One is cool, but I think it's sci-fi, and the other one is already having its moment. So what is cool but sci-fi is, like, I tell my agent, hey, go buy some coffee for me. Okay. And the agent goes and buys, like, real world things, does the comparison shopping, does that. This is like, it is a world. OpenAI announced certain integrations, Stripe announced certain integrations, Shopify, Etsy. I feel like all they did stuff earlier last year. But I don't know that I actually bought, by the way, I bought Agentic Coffee. There's a website. I can literally go to a GPT thing. It was put together by this guy. He just trained GPT to be better at it. You can tell it, okay, this is the kind of coffee I want. This is how I drink it. I drink pour over in the mornings. I like light roasts. I want it to be floral and complex. And it'll say, okay, it'll ask you some more questions. And then it'll say, here's a coffee that's near you. Here's one that can be shipped to you. And then you just click a button and it shows up. And I bought like 2 things of Agentic Coffee. Okay, that's the long story. We're keeping our eyes on that. We think that's cool. I think the more exciting one is this idea of companies of paying for stuff on the internet, right? Like, I think we unlock blockchains are really good at programmatic payments. That's one of the things we are very good at. We're very good at authenticated payments, and we're very good at low fees. And those things are really good when it comes to agents want to pay for other stuff, not for you, but to fulfill their goals. So that's what we're looking very closely into. And again, we'll hopefully have I think something more substantive to announce on that. But I think it's super exciting. Like, one of the things, like, we all, like, there's Jevons paradox, right? One of the ideas of one of these central organizing principles of economics is Jevons paradox. When things get cheaper, people do more of it, and sometimes the net amount spent on something actually goes up because the elasticity usage unlocks just so much.
The scale economics play in that case.
Yeah, and we've seen it so often, right? The price of electricity went down. Maybe you remember, like, the computers we had, and people would say, oh, why? Like, oh, if computers get cheaper, it's just going to take away everybody's jobs. But actually what happened is even more jobs were created because we had so much more compute, and everybody wanted to, and that opened up jobs and jobs on top of jobs and so on. It's going to be super fascinating when this happens to payments. When the average payment gets transmitted for a tenth of a cent, a thousandth of a cent, millionth of a cent, when that net price can be achieved, what you're going to have is a lot more payments going back and forth. Because currently a lot of payments are blocked by the idea that if I want to pay you using a credit card, I will have to pay 2.5% or whatever interchange fee plus a 25-cent minimum. So there's a minimum amount anyone can achieve on, and even for larger payments, people limit the number of payments they do to try and capture back some of those fees. So, like, I don't know if you noticed, Uber and Lyft at some point switched, instead of just charging your credit card the moment you finish the ride, they send you a summary of the ride, but then they send you a separate email at the end of the day so that they can batch all your transactions into one credit card, and they eat some risk, but in return they only pay one interchange fee. All of that's going to be fascinating when we get to true machine scale, like making. I think my final observation on this is we've been like, I remember my professors and I have been talking about like microtransactions and micropayments forever. But the bound for micropayments, for a human, it doesn't unlock that much to be able to pay 1 cent rather than 10 cents. Because the limiting factor is my attention and my mental friction of having to approve that transaction. This is not a problem for an agent. So that unlock, when agents can buy stuff at 1 cent at a time, and you can scope an access key to say, hey, agent, you only have $10 to spend, go do this for me. That combination is going to be super exciting, and we're like, having a lot of fun playing in that space.
I just remember something from microtransaction. There is this pay per crawl concept, and that's the exact like a real good example of why microtransactions will be super helpful.
Yeah, that's the kind of thing that I think is super helpful. Paper crawl, paper API, paper something. I think there's going to be a lot of fun stuff happening there in the next, and there already is, right? Like, I don't know. I spent my last month, and every minute I had that I wasn't working and wasn't sort of hanging with family, I was trying to set up my Claude bot or whatever it's called now to try and do more stuff. So it's an interesting moment in our lives.
Last question. What is the relationship between Stripe and Tempo from both technical and organizational aspect? Technical, like is Tempo serving the back end of doing the blockchain payments for Stripe?
It's a question that comes up a lot. So Stripe is like, we are not a subsidiary of Stripe. We're not with Stripe is a early investor. They incubated us. They've given us a ton of help. As an intellectual, one of the most, yeah, sure, they've given us lots of money and lots of other things, and but I think the greatest thing they did was this doc that I got handed when I joined Tempo. And this is just a list. Like, Stripe has been trying to make blockchains work forever. Like, Stripe understands payments and the pains of payments deeply. And Stripe, got Bitcoin. Like, it tried to accept Bitcoin payments in 2014. It tried to use Stellar in 2017. Like, it's been trying to get, because they can see how much work they have to do to make this simple thing, person A pays person B, to make it work under the hood. They have to do a lot of work. They see how they can make that work much easier for themselves with blockchains. So they sent us like this document, right? This document was just the best. Like, it was like every one of their blockchain engineers had contributed, or many of them, whatever, of these are the pain points we have. This is what we can't do well on Solana. This is what we can't do well on Base. This is what we can't do well on Stellar. Like, this is other things we've seen when we try to use this rail, that rail, all of that. Can you fix as many of them as you can? And that was just like, that intellectual value to me has been the greatest thing they've done. Like, just like, this is what you want, right? You want your users telling you, or your potential future users telling you, here is what you need to fix for me in clear language. So you're not guessing what is it that they want. You're just building stuff that people will use. In terms of the organization, like I said, they are an investor. They are a separate company. They will use other blockchains. We will have other customers. It's just they continue to support a whole bunch of other blockchains, and currently they're I don't know how that's going to play out. And on the other side, they have told us we are super free to go to anyone, including their competitors, and try and acquire their business, and we will try and do that, because if you want to be a neutral party, you can't say, okay, no, we're only going to play nice with Stripe. So that's the way it goes. They've been super friendly and helpful, and I'm very grateful.
Thanks for walking through the technical aspects, product aspects of Tempo so clearly. If you enjoyed this episode, listeners, share it with your friend who is building in payments, stablecoins, or blockchain infrastructure. You can find Mallesh at @Mallesh Pai in Twitter, and Tempo @tempo.xyz. And as always, this is The Coordinate. I am Shabik Deb. See you in the next episode.
Thank you, guys. Thanks for having me.